the markets are priced to perfection, right? The multiples are so high. You have to expect some pullbacks from time to time. And people who are trading, right, which I separate a little bit from the average retail investor who maybe has an advisor who should be acting as a little bit of defense and interference between the immediate let me move in and out day to day, right? They're sort of that buffer. But people who are trading, active trading in the markets, I mean, with the multiples that we're at now, the market really it can't. You have to expect a pullback when there's some bad news, even if to a certain extent we all kind of sit and think, well, this is not really where we're going to land. There's going to be a negotiation. There's going to be a lot of posturing. There's going to be a lot of talk. And then they're going to meet at the end of the month and we're going to, kind of land somewhere in the middle that's palatable from all sides. But, there's enough movement in the market. There are enough people in the market who, again, at the multiples that we're at and the valuation that the market has today, you have to expect some pullbacks, and frankly, that's healthy to a certain extent, right? I mean, I think like the bigger concern that a lot of people have at this point about this market is that it is just getting carried away, particularly on the AI trade, and multiples just will not be rationalized later.
So where do you see value right here, Dana? Am I sticking with my Mag 7, the top tech names that have driven performance forever, it seems like, or do we try to get a little bit smart here? Small, mid cap, maybe look for some value outside of the tech space. What are you suggesting these days?
We're always proponents of diversification. I mean, look, our clients are, retail investors, right? Investing their retirement money. So whether you think that the AI trade is going to pay off in spades or not, what you're faced with is a bunch of portfolios that have a heavy dose of this stuff, no matter how you look at it, right? If they're passively invested, which a lot of people are, then they have a high concentration of Mag 7 and frankly of AI trade. But even if they're actively managed, most active managers in the space with a fully asset allocated retail client portfolio aren't taking the kind of tracking area you need to take to really take that bet off the table, right? They've got the bet on the table. It's just maybe in a slightly less. So we're absolutely going to be proponents of diversification because that looks like a safer route in any, right, whatever the outcome could be. It's not about kind of calling it and saying, when is this AI trade really going to pay off for everybody? Which, by the way, I think is what's at question here, right? It's not, is AI going to be a transformative technology? Is AI going to increase productivity? I think, folks are aware, right, that this investment is happening, this CapEx is happening because that's eventually going to be the case. But that's a very different thing than saying the AI trade right now is going to pay off for everybody. So 100%, diversifying into small caps, mid caps, international, which has done very well this year. I mean, let's think about the cyclicality of markets. Investors, the common investor who has money invested for retirement, college, whatever it is, should absolutely be diversified across the market.
Dana, let me ask you lastly how you were celebrating the latest birthday of this bull market. And I saw a line in a Bloomberg News piece which stood out to me. The S&P 500 has gone 97 sessions without a 5% pullback, compared with its long-term average of 59 days. That's according to Bloomberg data. Here we are, fourth birthday, I guess, and I'm wondering sort of how you're thinking about it and how much longer it has to run.
Yeah, the celebration is the data point that you can talk to investors about why they shouldn't try to time the market, right? I mean, it's great. We're 2 years of 20+% returns in the S&P, come into 2025 saying, well, can we really sustain this? Well, look where we are. You're 100% right. And the sort of the celebration and the way to think about it from where we're sitting is making sure investors understand how dangerous it is to try to time the market and be in and out with their long-term money, right? That market delivers returns in a chunky fashion. And so, even if something is not historically common, it still can happen, and pulling out and going to cash, which so many people obviously did, probably in the long run hurts your return as opposed to helps. Does that mean I think we have forever to run? No. But I do think looking at least to the end of the year, it's hard to see what's really going to put a stop to it at this point. It's not to say there can't be some exogenous shock, but, even if you believe that this story that's developing about AI is a bubble and the investment's not going to pay up fast enough, There may be some truth to that, but seeing it, kind of diminish within the next few months, even 6 months, is hard to picture. These companies are very well capitalized, and their investments are pretty well understood at this point.